Presented by eBix Cash. हर खुशी के लिए काफी है.
Hello and welcome. You're with us here on Business Today. I am Abha Bakaya. Let's take you through the headlines tonight. Record close on the Lal Street as Nifty hits 18,000 for the first time. Sensex tops 60,100. Auto, power stocks gain while IT drags as TCS tumbles post-week earnings. Jhunjhunwala's Akasa Airlines gets an NOC from DGCA. Flight operations expected by June 2022. Reliance hits a fresh record on green energy push. Company acquired controlling stake in REC Solar and 40% stake in Sterling and Wilson. Even as opposition leaders slammed the union government, Home Minister Amit Shah summons top officials for a discussion on coal shortage. Analysts assure Business Today TV that there will be no power outages. Prime Minister Modi launches Indian Space Association, says space sector is a huge medium for progress of 130 crore Indians. And Nobel Prize 2021 in Economics awarded to US-based economists David Card, Joshua Angrist and Guido Immens. Good start to the week. Markets hitting record highs in trade. The Nifty scaling a fresh life high of 18,041 before closing the day at about 17,946. That's up about 50 points. Sensex ending at 60,135, up 76 points. The Nifty Bank was up over 500 points for the day. Auto, infra, metal indices all outperforming, up between 2 to 3%. Tech and telecom, that's where we saw the pressure. Reliance Industries, Tata Motors continuing to show strength, hitting fresh life highs in trade. We also saw gainers like Coal India, Maruti, Power Grid and Grasim, while it was really the entire tech pack that saw a drag in today's session. I'll bring those up for you on your screen. TCS, Tech Mahindra, Infi, HCL Tech and also a Britannia, some of the top losers today. Broader markets outperformed, up about 0.5% respectively. And in the Forex market, the rupee weakened further, hitting a 15-month low as crude oil prices continue to soar. Well then, when it comes to market action, even though we've had some tempering, minor profit booking here and there, still trading at those record highs. What do you feel is going to be the next trigger that markets will watch out for?
I think it will have to be global, Abha, because I think Indian markets are also watching global markets very closely. The US market has not been performing very well. We are seeing periodic bouts of correction there led by the Nasdaq. And I think Indian investors are also waiting on the sidelines, waiting to see if this actually precipitates or sort of coalesces into a major correction in global markets. If global markets correct very meaningfully, I think we will probably have reasons for our own correction out here as well. Because in the absence of that, what we are seeing out here is bits of positive news keeps coming in to lift sentiment. I mean, we've had the Air India divestment go through and that has lifted the mood and morale in the market quite a bit. And since the market seems unwilling to correct, what is going on is a fairly significant amount of sector rotation. I mean, even today, you look at what has gone in the market. I mean, the Nifty touched 18,000. It ended in the green quite a bit. But we had a significant correction in IT stocks led by TCS and Tech Mahindra. On the other hand, sectors which were not firing for a while, like auto, we've seen a very good comeback in Maruti, even in Tata Motors for the last couple of days. You've seen a continued rally in many of the public sector names like NTPC and Coal India. So, you know, different parts of the market are moving at different kind of paces. And overall, the market is not correcting too significantly. But to answer your question, I think this question or the answer will be settled by the outcome in global markets over the next week or two.
Moving on now, ace investor Jhunjhunwala's Akasa Air will be flying by June 2022. The holding company, SNV Aviation, announced this evening that it has received the no objection certificate from DGCA, the aviation regulator. According to a release, the airline aims to be the most affordable, dependable and greenest. Akasa Air will be a budget airline competing directly with Indigo, Go Air, AirAsia India and Air India Express. Jhunjhunwala, who appeared at the India Today conclave last Friday, met the Prime Minister and the Finance Minister last week. And with all that being coal, not gold anymore, India's largest conglomerate Reliance Industries made Sunday a super solar sweep with a big bang entry into the solar power market, global and domestic. Reliance picked up a stake in Sterling and Wilson from the Shapoorji Pallonji Group and also bought Europe-based REC Global from its Chinese parent. The move not only secures a place for RIL in the solar power race, but would also help India achieve green energy independence.
Among the grand plans announced by Mukesh Ambani in the Reliance Industry AGM was a massive push involving tens of thousands of crores of rupees of investments into green energy. Included in this were 4 proposed giga solar factories in the Jamnagar complex. Now in its next move, RIL has snapped up Norway-headquartered REC Global from China National Chemical Corporation for around 5,800 crore rupees. Later in the evening this past Sunday, the company also announced the acquisition of a 40% stake. That is, if its open offer is fully subscribed. In solar power equipment maker Sterling and Wilson for around 3,630 crore rupees. REC Global brings with it 3 factories in Norway and Singapore producing solar equipment. The company is in the process of setting up plants in the US and France to expand its production of solar cells and solar modules. Important because of near monopoly China currently enjoys in the field. Currently 80% of world solar manufacturing supply chain runs through China. Manufacturing of 78% of all solar cells, 72% of solar modules, 67% of polysilicon and 97% of all silicon wafers used in solar cells is in China. REC's products will also free a part of the supply chain for the Jamnagar gigafactories from its dependence on China. The deal also ups the stake for Gautam Adani, who had announced his own green energy plans recently.
Over the next 10 years, we'll invest over $20 billion across renewable energy generation, component manufacturing, transmission and distribution.
Reliance has already announced plans to generate 100 gigawatts of green energy by 2030. Given the investments going into the sector, both private and public, and the tariffs which are much lower than either hydro or thermal, the figure could be achieved much earlier and help India get weaned away from environmental dirty coal. Bureau Report, Business Today Television.
Now, the country has been gripped by reports of an acute coal supply crisis that threatens to cripple power supply to households and industries in the weeks ahead. The crisis does seem real. Over 50 large thermal power plants, accounting for around half of India's coal power capacity, had 0 to 3 days of coal stocks, despite the central government guidelines that call for a 14-day stock of coal at power plants. How did we come to this point and what can be done? Here's the story.
The fear of lights going out across India due to a shortage in coal supplies has reached a crescendo. So much so that Home Minister Amit Shah met with Coal Minister Prahlad Joshi and Power Minister R.K. Singh to review the situation. This is in the backdrop of a record supplies of 255 million tons coal to power plants by Coal India this year. Overall power generation too has risen, with the month of September recording 9.34% increase over the same month in 2019. According to the Coal Ministry, coal supplies to the power sector in the first half of the year was highest ever. PSU giant Coal India has over 400 lakh tons, which is being supplied to power plants. Figures also reveal that while the daily average coal demand at power plants is 18.5 lakh tons per day, they are being supplied with around 17.5 lakh tons per day. The gap is because of extended rains, which disrupted dispatches. However, coal is supplied to power plants daily that covers their needs. As economic activity improves, Coal India is augmenting supplies rapidly and is expected to provide 1.6 million tons by Wednesday. On its part, the Power Ministry has also repeatedly clarified that coal supplies to states have increased. This after 11.71% decline in thermal power generation this September over the month of August.
We are supplying power in whatever quantity, whichever the state wants. If any state wants any more power, we can supply that. I assure everybody that there is sufficient power and there will be sufficient power to meet the entire demand. That we have taken care of. So if any state has any problem, let them get in touch with you, we'll sort it out.
Amid conflicting reports of rising demand and low coal stocks, states have been purchasing around 264.5 million units of power from the spot market exchanges, where electricity prices have risen from around 4.6 rupees per unit in mid-September to about 16.42 rupees per unit as of Monday. This puts distribution companies in a spot and could increase financial woes for the suppliers and buyers. Bureau Report, Business Today Television.
Dheeraj Nair joining us, Chief Economist at Vedanta. Dheeraj, now you've written a lot about the coal shortage. Explain it to us. Is this a power crisis or is this a coal production crisis?
Well, I mean, in a way it's both, and in a way it's not even a coal production crisis. Let me just explain it to you. I mean, the fact that it's a power crisis, I mean, you may call it a power crisis is because 70% of our power is produced using thermal coal, right? So most of our power in India comes from this source. So any shortfall of the raw material or input would obviously lead to a power crisis. Now, in terms of supply as well, the coal production, in the first 6 months of this year by Coal India, which is pretty much the main supplier of coal in India, is about the same as it was last year, right? And last year, we know at least part of the period was in lockdown. This year as well, April and May, we had the second wave and there was a subdued economic activity. So it's not that the supply necessarily fell a lot, but it's a demand which has gone up because the economic recovery in the last 2 months has been much sharper than people expected. And, the more economic recovery takes place, people use more power, industries use more power. And therefore, there's a demand-supply mismatch. That's what's really happening. Demand is exceeding supply. Now, normally, when demand exceeds supply and you don't have enough domestic production, you just import. The fact is that India anyway imports every year. In normal years, it imports a quarter of its coal consumption. So it produces 3/4 here and 1/4 is imported from abroad. So it's not that domestic production in any case makes up our whole demand. It's always met by imports. But this time, coal prices are 4 times higher than they were last year. That's again because of the global recovery, global liquidity, and the fact that in China as well, they have a shortage of coal and China is importing a lot of coal. So I think it's a mix of many factors come together, which has led us to this crisis. Power producers don't want to import coal at $200 per ton, which is the price right now, because they cannot pass that price on to consumers. Discoms will not renegotiate those contracts. So it's not viable to import at this price. That is why we have a shortage. It's not that domestic supply has fallen too much. Its demand has gone up and we cannot import because of the unviability at the current price. That is why we are in this crunch.
So then, Dheeraj, does that mean that the lights are going to go out across India?
Well, I hope not. There are certain changes which were made in the coal policy, which now even allows, captive coal blocks, those which were meant purely for industrial use to sell surplus in the market. The government can, use its means to import the necessary amount, the shortfall amount. So I'm hopeful it will not be a very big crisis, but there are pockets in the country where coal supply may not reach, where there may be shortages and power cuts. So in some states, I expect it will be there, but I don't expect something as dramatic as a, all India blackout. The good thing is that, the public is aware, the government is aware of what the situation is, and measures are being taken to, address the problem.
All right, Dheeraj, great to have you with us on the show today. Thanks so much for sharing those insights. Prime Minister Narendra Modi announced the launch of the Indian Space Association, or ISPA, this morning. It's a premier industry association of space and satellite companies which aspires to be the collective voice of the Indian space industry. The association will be undertaking policy advocacy and engaging with stakeholders in the Indian space domain, including the government and its agencies. Additionally, the move of launching the association will ensure the foray of satellites into space, enhancing communications and better internet connectivity. Listen in to what Prime Minister Modi had to say at the launch of the India Space Association.
21वीं सदी में स्पेस दुनिया को जोड़ने में, यूनाइट करने में अहम भूमिका निभाए, ये भारत को सुनिश्चित करना होगा। आज डिफेंस से लेकर स्पेस सेक्टर तक सरकार अपने एक्सपर्टाइज को साझा कर रही है। प्राइवेट सेक्टर के लिए लॉन्च पैड उपलब्ध करवा रही है। आज इसरो की फैसिलिटीज को प्राइवेट सेक्टर के लिए ओपन किया जा रहा है। अब ये सुनिश्चित किया जाएगा कि इस क्षेत्र में जो टेक्नोलॉजी मैच्योर हो चुकी है, उसे प्राइवेट सेक्टर को भी ट्रांसफर किया जाए।
Now, the ISP's founding members include Larsen & Toubro, Nelco from the Tata Group, OneWeb, Bharti Airtel, MapMyIndia, Walchandnagar Industries and Anand Technology Limited. Other core members include Godrej, Hughes India, Azista BST Aerospace, BEL, Centrum Electronics and Maxar India. Now, the chairperson of Bharti, Sunil Bharti Mittal, spoke at the launch and talked about OneWeb's plan to launch satellites using ISRO's PSLV technology. He said OneWeb will be the first customer which starts to bring a commercial position into the Indian space market. With this new initiative that we've taken, I'm sure more and more international customers will come to the doorstep of ISRO in Asia. We have a great future ahead. The Prime Minister is showing us the way, and it's time for the industry to respond. It's now time for our Market Guru this week. Our global business editor, Udayan Mukherjee, and myself in conversation with Kenneth Andrade.
Welcome to this Business Today Market Special. I'm Udayan Mukherjee. With me is my co-host Abha Bakaya and a veteran of the stock market, Kenneth Andrade, who's the founder and chief investment officer of Old Bridge Capital. Kenneth has been in the stock market for several decades now, and he brings in that wealth of perspective with him. Kenneth, it's great to have you on the show today. When these days with such a powerful rally in the market, when we speak to market participants, we get one of two views. One, of course, is the skeptical one, which is that the market's headed for a deep correction very soon. And the other is that we are on the cusp of a really big profit upcycle after many, many years. And therefore, any correction would be just shallow. Which side do you veer to?
I think they are right on both contexts, and I just put it this way: there is a froth in a lot of businesses out there, and a lot of stocks that are trading out there. And if you just go by the year-ending numbers, which is basically 2021 March year-ending numbers, the profitability metrics are shifted to a very different kind of businesses that are there. So you got market capitalization sitting in one extreme of businesses, and in the other extreme you got companies that are actually making cash flows. To put it simplistically, 2022 March end, if you look at what's going to contribute to profitability of the underlying indices, it's got everything to do with commodities, and they have no representation in the index itself. So I think that's the anomaly. Even if the market does correct itself, which we've seen multiple times before, that market's always correct. I think the leadership is going to be taken away from the businesses that have done well so far.
That's an interesting assertion. Are you saying that the expensive part of the market will actually lead the correction, and maybe other sectors will sort of balance it and become the leaders of the next upcycle, and that leadership will be in commodities? Is that what you're saying?
Yes, I'm saying exactly that, and there's a reason for it all also. And if you look at multiple trends and the multiple ways that investors flock around the best thing in the marketplace, usually you try to justify valuations where they stand. Okay, and today it is price to sales. The world's going to get digitized, and things are going to be very different after the next decade. But how much do you pay for growth? You go back to the 2007 and 2008 beginning rally of commodities and capex. You set up surplus capacities with that market capitalization there. And there you had, you always argued for sum of parts and price earnings to growth. And then you go back to 2000 and it was valued very differently. So all bubble cycles take place. Whenever the bubble cycle takes place, you got a very different approach to trying to justify valuations. And I think that's what's happening in the marketplace today. So whether it's 6 months, 1 year, I don't know how to time this, or we've never been able to time this very effectively. I think that part of the market is going to consolidate. You will have fewer winners come out from there, but the entire leadership is changing. Our sense is, yes, it's going to be manufacturing, which also includes commodities, and a whole host of other businesses where the visibility is fairly high. It's fairly high, and it's fairly high into the decade, not just into the next year or two.
So, I mean, if I were to, I mean, you explained the principle or the philosophy behind your view, but for somebody who wants to take away something from an investing point of view, could you drill it down to sectors where you see the froth? Is it only because there are not too many digital stocks in the market? I mean, you can only name one Zomato, one InfoEdge, etc. Are you also including the very highly priced consumer FMCG kind of companies which trade at 50-60p multiples? And when you say manufacturing including commodities, are you talking about sectors like chemicals, steel, aluminum, maybe even some of the other exporting sectors? So what to buy and what to avoid? I mean, if you can drill it down to what you're saying in terms of sectors.
Simplistically put, our point of view is that whatever was done well in the last decade, and that was led by a consumer economy and a consumer rally, plus everything that leveraged the consumer cycle, which is essentially the financials part of it, or the lending cycle of the financials part, I think that's going to get compressed in terms of valuations. Those businesses will still come out great at the end of in this next cycle, but you're not going to get a profit expansion or dramatic profit expansion, and that's not, and that's also not going to create higher multiples than where they are right now. So that's the place that we're very cautious about. They will do well. Companies' profitability will grow, but I think they're already fairly well priced into it all. What's not really priced is the commodity cycle and manufacturing. So take India's largest steel company, right? Or even take India's largest aviation business. Now, those are companies and businesses that are throwing out enormous amount of cash flow. Or just look at utilities, what's happening out there. Those are the businesses that are throwing out enormous amount of cash flows, but you can actually value them based on our very traditional way of looking at cash flows. All you need is sustainability of that trend for not 10 years, but for the next 3 years. Okay, and if you get that sustainability for the next 3 years in terms of the cash flows that they're turning out, it is equivalent to their current enterprise value or to their current market capitalization. So what's happening with companies that haven't attracted attention over the decade is that no supply has come in. So it's been ignored not just by investors, it's also been ignored by entrepreneurs or private equity or the banking system. And that's created a supply crunch in the system and demand still chugging along. So if you look at the supply demand economics, it's very much favorable to everything that we see doing well right now in terms of manufacturing, commoditized businesses, okay, some element of services businesses, real estate. Okay, I think we could be heading into a fairly long-winded cycle in a lot of these names. Simply because we're not looking at 10-year visibility, even 3-year visibility explains their current market capitalization.
Do catch that entire interview on businesstoday.in. That's all from us tonight. Thanks so much for watching.